Hi, and welcome to another episode of Nursing Your Way to Wealth, where a mental health nurse and an accountant talk about wealth creation, personal development, and financial independence in the UK to help you live the life you deserve.
Hi, everybody, and hi, Alex. Welcome back to what is now episode 79, which is still quite unbelievable that we've done that many episodes. Today's episode is a bit of a kind of going a little bit deeper on gold. So you might have, if you've been on the news, scrolling social media, even just been on a bus, you've probably seen adverts for the things advertising gold. So gold has become so the price of gold has actually gone up by, I think it was 57% at the time of recording over the last year, which is pretty crazy when if you think the Dow Jones has gone up by about 9%, the Nasdaq about 24%, the FTSE about 14, 15%. So really outlandish returns from something that probably hasn't been on has been fairly static probably for the last like nearly decade or so. So I thought it would be interesting to just explore gold in a little bit more detail, look at it as what it's like as an investment, if you're keen to invest in it, how you would go about that, and also how that would fit in like more broadly as a portfolio into a portfolio. So hopefully it's an interesting you get some interesting takes from that. We'll also do a reasonable or ridiculous at the end, and then a bit of a quick return on heartbeats. But Alex, before I do the my return on heartbeats, which is me this week, any opening gambits on gold or opening thoughts before we go into it?
Yeah, just that. Like when you asked me this today, like had I noticed it, I was like, no, because I don't track this kind of thing at all. I also clearly don't look at buses, or anything like that. But I'm just looking back at the Royal Mint kind of gold price as we talk, and like it starts here from the 1st of January 1969, and it floats all the way along, and it doesn't go above £500 until about 2009, 2008, which is interesting because crashed in 2008, like the housing
Yeah, yeah.
problem. It goes above that till about 2012, and it peaks at about £1,100, and then it goes down again and up again, and it doesn't go above that level again until 2017 ish. There's a bit of a dip there. And then there's a little bit of a spike 2021, 1500, and then down again. But then in the last, like, since, now this map's not very easy to kind of look at, but since September 2023, it was still 1500. And now 3,271. So it's absolutely flown. Like this J curve on this graph is a bit
Mm.
mad. Um, so yeah, so I don't own any. I've obviously been aware it exists. Like I have a gold sovereign I was bought when I was a kid in 1988. Couldn't I don't know where it is. Hopefully it's at one of my mum's or my dad's house. But yeah, no idea where it is, how much it weighs, or what it's worth. But I might look it up, considering it's absolutely gone through the roof. Um,
Yeah, quite interesting, isn't it? And I think it's just one of those investments that has almost plodded, and we'll come on to it in more detail, but it's certainly it comes into its own when there's a lot of uncertainty in the world. Um, and yeah, it's seen as very much a safe haven. So yeah, we can touch on that. But shall I do my return on heartbeats before
yes.
we dive in? So my couple of weeks ago, one of my reasonable or ridiculouses was actually me and my wife took out a new gym subscription. So we buy it through her work. Our previous one was coming to an end, and we had to choose a new one. So we went to one that's slightly more expensive. So it was about £14 a month extra between two of us, which I thought we could swallow. And the we've started going now. And we've got it's a really nice gym. It's nice and compact, and it has a really nice swimming pool with a spa area. So it's got really cool jacuzzi, nice lounges. It's got steam room and sauna. And last Friday we finished work and went straight there. Went for a swim, like relaxed in the jacuzzi, sauna, steam room. Came out nice and relaxed, and then had came home for a really nice dinner. So it was just a really nice thing of yeah, it's definitely worth that few extra quid. And it was nice and quiet. It's peaceful. there's no kids running around. The fact it's quite a small centre as well just means there's not a lot of traffic or not a lot of people. So really, yeah, big return on heartbeats for me on that on last Friday, and we should be doing the same again this Friday.
Yeah, I think it's just a nice way to end the week, isn't it? Like to mark the ending of the week instead of having like a takeaway that's full of ingredients you can't pronounce, but going there and actually like relaxing properly, like with your wife or your husband or whatever. It's like because you guys have worked all week, like you've done quite a lot of mental kind of effort, etc., traveling, commutes, blah blah blah. And it's a good way, I think, of just marking like closing that week off in your mind that actually the next 2 days are for resting, recuperate,
Yeah.
and I'm very impressed that you get so much extra value out of it for what is £7 a person, and it's cost you £3.50 per time.
Yeah,
Worth every penny of that.
exactly. So we're really pleased. And it's the same journey time.
Yeah, that'll buy you a lot of Norwegian hats.
I know, yeah, I need it. Um, yeah, so honestly, we had a really good time.
Yeah, and it's close to your house, etc. Like, there doesn't sound like there's a downside.
It is, so it's the same drive from our old one as well, so it's about the same
Yeah.
distance.
Oh, good. Well, I'm glad you're enjoying it.
Yeah,
So definitely, that's a reasonable ridiculous has turned into a good return on heartbeat. So sometimes spending extra money is absolutely worth it.
yes, and that's a lesson to us all, I think.
Yeah.
Um, awesome. So maybe we move on and start discussing gold, which is for me it's such a peculiar like investment because it doesn't really do anything, does it? It's either coins or it's bars or it's jewelry or something, and it doesn't produce a cash flow. And I think there's quite a funny scene of like Warren Buffett did a talk about gold on one of his like annual meetings at Berkshire Hathaway, and he was like, oh, well, you can look at it and you can polish it and you can you sit with it there, but it doesn't do anything. Um, but I think that the reason gold is quite an alluring investment for a lot of people is I think it's been used as a store of value. It's been used as a way to trade um, money between people for thousands and thousands of years. I think we were doing a bit of research before we came on, and it was it 3000 BC that society started to kind of print not print gold, but produce gold for trade and things. So it goes back thousands of years, and so it's something ingrained in our society that gold equals a store of value. And when there's a lot of political uncertainty in the world or just general uncertainty, the markets might be crashing for whatever reason. Generally, when there's expected to be a lot of inflation, gold is seen as somewhat of a safe haven. And I think it kind of harks back to that time where we've been using it for thousands and thousands of years. Gold is always worth something, therefore I can put my money into gold. And for I think the last was it 100 odd years from the late 1800s to the early 70s, all countries were on what they called the gold standard, which is where the central banks of all the countries would have to have physical gold in their vaults, and then they would issue currency against the value of that gold. That since in the early 70s, 1971, I think the US came off that gold standard, and other countries followed. So now, when government want money, they just print it. They don't have to have it tied to a value of store of gold. But I think it goes to reinforce the kind of safeness and solidity of this kind of precious metal. There's a lot of allure about it, and I think the reason we're seeing the price pop so much now is we're at a time. I think we've come out of COVID. Inflation, certainly in Europe, isn't really, well, definitely the UK is not going away. Um, there's the war in Ukraine. There's political tension between the US and China. For the first time, the US president is getting very involved in the way that the central bank in the US, the Federal Reserve, kind of sets interest rates. So there's a ton of uncertainty in the world. probably more so than there's been for a long time. The level of government borrowing is higher than it's been, I think, just since after the war, World War II. So we're in a really kind of like getting to the limits of like financial capacity in the world. And because the stock market has done very well, the AI boom is causing people to think, there's potentially a bubble there. And a lot of people's portfolios are held. If you've got kind of a global tracker, you've probably got a good, maybe 30-40% of that might be tied up in the value of like 7 companies, which is quite then concentrated. So, and gold, because of it's seen as a bit of a historical, like safe haven, people will flow into gold as a bit of a way to diversify away and change, reduce down some of the risk within their investments. So that's kind of the reason why we're like seeing it. I think when prices do increase so much, like they have been, it can fuel a bit of a bubble, which is why I mentioned you might have seen like adverts on bus stops for like buying your gold cheap, or like offering the best prices for your unwanted gold, because the more people are buying, it kind of indicates, people are wanting cashing in on their gold price because the price is only going to go up, and it actually can kind of fuel people buying more gold because they think the price will go up. And because you can't really value it in the way that you can value a company, you buy gold because you think the next person will pay more for it. So it can be a bit of a self-fulfilling bubble in a way, but fundamentally, the reason for a lot of the rise in that gold price over the last kind of 12 months is just a huge amount of political uncertainty.
Yeah, and I think you put it very well, like in terms of why gold would move that way and why the price has gone up. But just to add some like a humanistic brain approach, like we don't like our brains don't like uncertainty. What we like is knowing what we've worked for will stay and it will remain and we'll have some value out of that. That's why I think people, especially in Britain, overvalue their own house because it's physical, you can see it, you can touch it, it's tangible. The reason people certainly buy gold is if they've made a lot of money, however they've made it, they want to keep some of that. A lot of people can't stomach the value in things going down. And there's a really sad story about like the crypto crash that's happened recently of that guy found in, I think he completed suicide in his Lamborghini because on paper he'd lost millions and millions of pounds. And it's a move towards people wanting to hedge their bets against losing some of that money. It's often called like hedging in gold or the gold hedge uh, in certain places. But I mean, Alex, the only thing I can think of that gold's actually useful for, apart from being a store of value, is it's quite good at conducting electricity. That's not going to make it the next most valuable metal or commodity without the kind of imposed value that we give it. So if you think about it, even from an Olympic point of view, the first place medal is always gold. It's not made of real gold, I don't think, but it might be plated in gold. But then you have silver and then you have bronze, and it's probably always been in that order. And I think but people do value it for particular reasons. But when you take away the human element of that, you're right, it doesn't do anything. You could buy a gold bar, stick it in your drawer somewhere, and in 50 years' time, it's still a gold bar.
Yeah, exactly. And I think it comes down to its trust in something, and it's probably
Mm,
because ultimately money is only it's trust that's because you've got it says £5 on your £5 note. I trust that that's worth £5. It's not some made up currency.
not monopoly money.
No, precisely, and it's
Yeah.
backed up, by a government which is fairly stable and everything. And gold has the kind of same thing. It's probably the most trusted um, asset in terms of it's always going to be worth something. You're always going to be able to trade it, as it's been evidenced for the last kind of 6,000 years or 5,000 years that it's been used for something. It's definitely outlived any other form of currency. And so I think there is that, like you said, that you want that safety blanket. And I think, yeah, gold, we put a huge amount of human emotion onto it. And that is, it's trust. And I think that's probably won't change for the next, probably in our lifetime. But yeah, as a thing, it's not. It is just a metal. Like it doesn't do anything.
Mm.
And I guess there's elements of with jewelry, it's a status symbol, and there's other human, I guess, societal things which get kind of projected onto it. But yeah, fundamentally, it is just a, as you said, it's a bar of metal, but that gets given the value in it is the trust, which is seen if because where you've got currencies where where you are able to print money, that causes inflation, and the that because then that asset itself devalues. So it's like where you never hold. That's why you never hold cash as an investment because it just gets devalued and they keep printing more of it. And it's in the interest of governments to have inflation because it reduces the value of their debts, and so they need to, in real terms, pay less money back. But gold doesn't have that. Like gold is a different. It still holds value in the same way that a currency does, but it doesn't have that risk of being devalued by a central bank.
Yeah, and I think a good way of thinking, I read this the other day, a good way of thinking about inflation in terms of, we take our £5 note you mentioned before. Back when I was at school, when I was, I kind of, I don't know, 10, 11, 12, something like that. Um, and it was probably like the mid 90s, something like that, 98 millennium. Yeah, you could buy like 50 Freddos, the 10p chocolate frogs, for a fiver. Now you might buy, I don't know, six, maybe seven of them. So that even though the value on the note stays the same, its purchasing power can change, and that is due to inflation and governments printing more money. And if there's more of something available, the less valuable it will be. I also read a story the other day about some space scientists. I forget the proper term for them. They found a like an asteroid or something that's full of gold somewhere in the atmosphere, and someone below was like, "Oh, if only that would hit Earth, we'd all be filthy rich." And then someone else is like, "Well, if you studied economics, you'd know that it would actually devalue gold because it would make it so abundant that it wouldn't be worth anything anymore. There would be
Yes.
no scarce factor, no rarity whatsoever. I don't know, we'd have laptops made of gold, maybe, or something like that. But I do see its value as a part of a portfolio. I wouldn't, I don't hold any myself. I don't hold any funds of gold or anything like that. I kind of wish I did. I bought them a while ago and kind of rode the value up, but I think it's got a place in terms of being a part of a diversified portfolio. I know a lot of the books Andrew Craig writes, especially How to Own the World, he mentions like having some allocation towards precious metals, and in that he talks about gold, silver, and I think certain jewels. But it's been a long time since
Yeah.
I read it.
Yeah, exactly. And I think yeah, coming on to that it being part of a portfolio, I agree. I think it can form part of a diversified portfolio. You probably don't want a load of allocation to it. I mean, anywhere from I think I've read anywhere from like 2 to 15% is a broad with 15% being you're quite very defensive.
Punchy amount.
Yes, which you probably that's more of a if you're now in your wealth preservation phase, that's then quite a more appropriate allocation. But it needs to be mixed in with you'd have some bonds in there, you might have some other commodities. I think that's what Andrew Craig talked about with that having commodity exposure, so you can get, you know, not just on the metal side, but also the, oil and pork bellies and orange juice
Coffee.
things and
Yeah,
coffee.
that's it.
Exactly. So it's you literally then have got exposure to that. And I guess there's a couple of ways of actually then buying gold. So you don't necessarily have to buy it as jewelry or anything. So you can buy coins. So so you can have it like physical. So like keep it in your house, or you can, if it's very valuable, you can pay to have it stored. So if the company you buy it from, they will often offer a storage service, but that's only really worth it if it's a lot of money. But yeah, you buy like coins, like gold sovereigns or like Britannias and things, or bars of gold. So you can pay. well, I think that the standard like bar of gold that you would see if you imagine watching James Bond Goldfinger when Goldfinger's storing gold in his vault, they're all like 12.5 kilos of gold bars. That's currently worth about 1.4 million pounds. So maybe unless you're incredibly wealthy, you probably might well have one of them. But more fun facts about gold: if you're looking at physical gold, doesn't you don't get charged VAT if you buy it, and the coins that are minted by the Royal Mint are free from capital gains tax. So if you have gold sovereigns and the price of those goes up, you don't have to pay capital gains tax. Do have to pay capital gains tax on bars of gold. Don't know why that's a different rule, but there's a lot of things that are odd in the tax code.
It's a very big book, right?
And it changes every 6 months. So I think a very not exactly a nice light read. I guess another way, and I guess the prevalence of like ETFs and different funds have made this a bit easier. But you can buy ETFs where the money goes into the ETF and they buy physical gold, and you have a share of that gold bar. So say if you might have a fund and they bought $100 million worth of gold, that's in a vault somewhere in a bank, and then the fund is then selling shares of that gold, and you can buy that through an ETF in an ISA. So I personally have got a bit of a mix. So I've actually got a couple of well, I got 3 gold sovereigns, one which was bought for me as a present, and then 2 which I bought years and years ago. I just quite like having them, and then I since just to avoid the transaction fees, just have bought probably over the last kind of 2 or 3 years as I've just started to build out a bit more of a portfolio, like a bit more diversification. Not loads, but I bought some of it is an ETF that tracks the price of gold. So it kind of you still get the same exposure, and that's within my ISA.
No, I was just thinking, like if you have some kind of gold as part of your thing, I was just saying, like if you do want to go and buy some, you can get it from like the royalmint.com. I've just looked at bars itself. If you were to buy a bar, so for a kilo gold bullion cast bar, is £101,000. So like you could buy a kilo of sugar for like 90p or something or less. But replace that weight for gold, and it's now £101,031.
Yeah.
And it does say, it's got a little symbol next to it that says limited stock.
Exactly. For a kilo.
So, and actually, there's the one next to it, 500 grams is 50,000, obviously. And it says, email me when it's in stock. So it looks like people have been buying. Actually, a lot of these things are out of stock anyway. But it just seems like 100 grams is £10,000. You probably worked that out from a kilo being 100 grams. But like, I put more flour in the biscuit I made the other day, and then we're looking at like kilos of gold being, the average house then is worth what, 2.5 kilos of gold?
Yeah, like 10 grand's worth of gold. A fun fact I read about gold: so over time, gold tends to beat, or if not, stay in line with inflation. If you were to the average bar of gold, which I think is that 12.5 kilo bar, I think that's the standard like traditional bullion bar. You'd be able to that would be the same price as an average house, and notwithstanding the ginormous rise of the gold price over the last kind of 12 months, a 12.5 kilo bar of gold now is £1,350,000, which is obviously enough to buy a house. But if you were to then, I guess, average that out, you'd almost end up be like a 1-for-1, like the average house price is worth a bar of gold. So yeah, it tends to have stayed up with inflation when you look at it over a longer period of time. But yeah, you can literally live in. So if you had a 12.5 kilo bar of gold, that's 1.3 million quid. That would have been what, £800,000 at the start of the year.
That's mad, isn't it? Like I've just googled it again, and there's a company called Chards. I don't know how you say it. And you can buy a 400 ounce or 12 12.5 kilo bar. £1,261,397 and 20p. And it's just got next to it, add to basket. And that's absolutely thrown me that you can just
Yeah.
add that and have Amazon deliver it or whatever. I don't know how it's delivered, right?
It's almost like disappointing, isn't it? That's how it.
Yeah.
It's like the same way you would buy like a t-shirt. You can buy like a kilo of gold, or 12 kilos of gold.
Oh no, there is a delivery fee. So under here, right, it says, and it does say VAT exempt as well. It says, as to add to basket, it says book appointment, vaulted storage, or delivery from £1,495.
Yeah.
Like, so it's just a 10% on top for delivery of it, and that's just like, imagine that, £1,500 delivery. What kind of truck brings you that?
An armored truck, I would imagine.
Yeah, it's not going to say gold contains gold, is it?
No, it probably won't be my local DPD driver. It anyway throws my parcels onto the front drive.
Yeah, exactly. Imagine if it comes by like Every or Hermes
That's
or something,
what I mean.
and they
You'd never
just
get
like
it.
launch it over your fence
Yeah.
with a blurry photo.
But yeah, so I think, and I think that goes. There are issues with then holding physical gold, which you then don't get, I guess, with having like trackers. Another way of having exposure to gold is to buy almost indirectly. So you could buy a gold miner company. So that is a company that obviously that mines gold, but they will give you pay you out dividends, and their share price would, I guess, rise in line with it as well. Or you could broaden out your exposure to commodities and hold like a basket of them. So gold might be part of it, but you might have other things in there as well, like almost like global commodity index type things. So there's also with, I say, on gold miners, you can buy funds which themselves, because mining is very volatile as an industry. The share prices of miners go up and down a lot because a lot of it's it's like huge operations to get basically drill massive holes in the ground, but also the price of that product that they sell is set by a market. And because it's a commodity, you can't really differentiate gold from one miner to another, or coal from one to another, or oil from one well to another well. And so they tend to be quite volatile. But there are funds which you can buy in, which then hold a basket of miners themselves and like aggregate. So there is a way of still getting some exposure to gold, rather than just like from literally having like gold coins to probably a more diluted kind of index tracker, or using companies buying into miners or buying a fund of miners. So there's lots of ways of getting exposure, but I think it can form a part of a diversified portfolio. You probably don't need a lot. I think there's a famous portfolio which is called the Gone Fishing portfolio, which is meant to be, once you've made it and you've got your ton of money, you put 25% into equities, 25% into bonds, 25% into gold, and 25% into cash. Now that's the highest allocation to gold I think I've ever seen in any portfolio that's been suggested. And yet it's normally that kind of 2 to 15 or 5 to 15% sliver of a portfolio.
Yeah, you'd only have a little bit of it, wouldn't you? Rather than, yeah, I was just looking one up. The gone fishing thing. People have used the name for something else.
Okay.
So I can't find the thing that it does exist, but yeah, it does suggest ETF investments in gold, emerging markets, Pacific markets, European real estate, small cap, etc. So just a broad way of keeping wealth. You don't want to be like 100% in equities and then like it crashed the day before you're due to retire, because it could be problematic. Yeah.
Exactly right. Yeah, and it's that thing of having some assets, they call it some zig whilst others zag, but over time they tend to go up.
Yeah, and but another term for that is just having them. Is it like non-correlated or non-linked or
Correct,
something?
yeah, uncorrelated.
Uncorrelated. So the idea is like, if you think about a seesaw and two roughly equally weighted people are on it, when one thing goes down, say equities go down, gold might go up, and then the other way around as well. It's just the yin and yang of the market cycle. Howard Marks has written extensively about market cycles as
Yeah,
well. So he would be a good. I think one of his books, Mastering the Market Cycle. I don't own that.
I read that recently.
Oh, is it good?
It is. I wouldn't suggest it if you're a beginner to investing.
Hmm.
He gets quite technical, but it is very good. I'll probably have to read it again actually for everything to go in.
The sink,
Um,
yeah, they can be heavy.
but yeah, he's a great yeah hedge fund manager
Yeah.
and very very rich. So I think he's done quite well.
Obviously, not market type, not advice from our point of view to follow whatever he's doing, do your own research, etc. I've so one other question for you about gold, because you own a little bit of it already. Given the current price, would you buy any more, or would you be tempted to sell any of what you own?
Yeah, so I tend to the way I manage I have like a target allocation of what I want in terms of asset classes. And
Mm-hmm.
so if at the minute I don't have any plans to put any more in um to gold, but that's just because I've kind of got an amount that I feel is suitable for my kind of overall portfolio. And so
Mm.
I try and have a percentage across like all commodities. So I've got gold is one of them, but I've got like a mining trust and I've got like a commodities index. And then I've also got some like infrastructure and property. So like infrastructure like renewables infrastructure fund and like infrastructure like road funds and stuff. So I'm putting a bit more into those to bring my allocation to where I want it. There's just I'll tend to keep it within the realm, within like the bounds of those percentages.
Sure. So you're not being. What the point is here, you're not being swayed by like turbulence and stuff going up and down. You're doing it according to your original financial plan, which is what I
Exactly.
absolutely expected you to say. If you
Yes.
were to say to me, "Oh, I've sold all my
I've
gold. I'm
sold
going to do
everything.
this. I'm
Yeah.
going to do that," and I'll be
No.
like, "Who are you?"
No, exactly. So I have like my set allocation and I just
Mm,
invest accordingly, like every month or so. So well, yeah, every month,
yeah,
to kind of balance that.
yeah, and enjoy the journey by going to spas on a Friday evening.
Exactly. That's
Yeah,
it.
combo.
Rather than chasing, because I think you can quickly get into yeah, chasing things.
Yeah, definitely. You can get too in the weeds and you can forget to live your life, right?
Yeah.
Um, it's the book, like Morgan Housel's book. I've listened to most of it now, The Art of Spending Money, and he talks a lot about that. He talks about how people get so ingrained in chasing things, chasing either optimization, chasing returns, chasing wealth, doing this, doing that, that actually, if they were to take a step back and look at it, they'd be like, actually, I've already made it and I'll have a really good life, but they forget to actually live it.
Mm.
So there's a kind of an extra message in there. I still recommend that book highly. I'm 100% going to finish it, and I'll probably give it another listen as well. Okay, Alex, any other thoughts on gold before we move to this week's Reasonable or Ridiculous, which is not gold related?
Yeah, no, that was it. Hopefully that's covered yeah, a bit of an overview of it and how to fit it into a portfolio.
Okay, cool. So this week's
Reasonable or ridiculous?
is I've taken a couple of extra days off work this week, so I've only worked yesterday and today. My wife are going on a small trip Wednesday to Friday, and also just for the record, I haven't got any gold in my house. Don't come here when I'm away. So my reasonable ridiculous is it's around hotel rooms and upgrades. So you know when you book a hotel online and you have this, they give you like the standard room and then they give you the premium and blah blah blah. You get loads of options of like how much more extra money you can give the company. I just wanted your thoughts on whether it's reasonable to do a hotel upgrade. So we're staying 2 nights in Oxfordshire, and it's the hotel room is that they basically give you. Broadly, it's the same kind of stuff in it, but you get more space if you upgrade, and you get some slightly fancier fittings and things. So, is it worth it to upgrade the room? And it's 30. I think it's £30 for 2 extra nights. So it's like £15 extra per night. And the hotel rooms were about they're roughly I think they're £120 or something per night for my wife, me, and our dog. So it's just over 10% ish. Yeah. Um, So is it worth it to spend an extra 10% on your room booking for a hotel to get quite a lot more space? And by quite a lot, I mean one of the rooms would have been a tight squeeze for things, and the other rooms you would have more space than you perhaps would have needed. The only other benefit of this room, the more expensive room, is it's on the second floor, so there's some stairs involved. But my thinking was it would be a little bit more quiet. So I've already done it. I've already paid the extra 30 quid. But from your point of view, do you think a slightly bigger room with less noise and possibly better views because you're 2 stories up, not on the ground floor, is it reasonable or ridiculous to do that?
Yeah, I think that's a good one actually, because I mean, it seems like more and more services are starting to like chop and change what you can and can't pay for. But I think my view has always been if I'm going to spend more like quite a bit of time in the room and I want to relax in it, I think it makes sense. If I'm using the room as like a base and I'm going to be out all the time and literally just like sleep in there, then I tend not to do it. So I think if the weekend is that you're enjoying it and you're not going to be like you're going to have time to enjoy the room, especially if you've got your dog there. And I think that seems quite reasonable for like £15 a night. Then I think that's reasonable. I think it's where you start looking at it's like 100 quid a night for a basic room or 200 quid for the next one. That's where
That's a different
that's
story.
different. But this seems really reasonable in my opinion.
Yeah, I think it's like I've already done it, so
Yeah.
I've paid it already. But I'm thinking just extra space for the dog and us as well. It's not cramped and things, and we are going to go out and do loads of things around. We're going to do a couple of English heritage places, which will be nice. But with
Nice.
our dog's really old now, so we will spend more time in the room than perhaps we would if she was much younger and we were taking her out a lot. But I will report back
Yeah.
next week whether it was useful or not. A bit like your gym and spa experience. I might come back and be like worth every
Yes.
penny
Look
or
forward to it.
absolute waste of time. And
Yeah. I've never felt bad by having a bigger room. I've never come out and thought, oh, I wish my room was smaller. So
no, true.
I think looking
Yeah,
at it
I've
that way.
sometimes come out and be like, wish I had some extra space here, or that was a little bit cramped. Yeah.
Yeah.
Um, yeah. Okay. Cool.
So I think yeah, that sounds perfectly reasonable to me.
Lovely. Well, we'll report back next week for episode 80. I'll just close the loop on that, but I'll do a really quick summary. So, your spa and gym upgrade you and your wife did absolutely worth it for the extra money that you spent. It sounds very relaxing, and I think I'd have done the same thing. We've spoken about gold, and it's a little bit about its history. It came from like before the time of Jesus. It is now still a thing that we humans give it value. It's only good really for conducting things, but the price of it's gone through the roof due to lots of changes, political, global landscape. The war will do that as well. A lot of unrest and uncertainty would also do that. We've talked that I don't own any gold particularly, apart from one small sovereign, which is stored at my parents' house. And you have a little bit of exposure to gold as part of your wider portfolio. You're not going to make any changes to your portfolio based on the recent change in price. You can buy a 12.5 kilo gold bar. It's just £1.2 million, and you can have someone deliver it for 1,500 quid to your house, should you wish. Again, not financial advice, and absolutely not something either of us would do. Although, Alex, if you come back next week and be like, bought 25 kilos of gold, sold my house,
Yeah.
I will be exceptionally surprised. But if anyone of you like listening, if you got any extra thoughts on gold, you factor it into your portfolio more than like a satellite amount, then we'd like to hear from you. You can email us, you can come on and we can chat about it. We'll have episode 82 or something, gold 0.2, 2.0. And we both agree that a small cost for a hotel room upgrade is a reasonable amount. I think I would probably pay up to 15, maybe 20% on a room upgrade if I absolutely needed it and it was, I think, worth the money. But you know how they make hotel photos look great. When you arrive, you're like, oh, yeah. So
That happened to me when I was in India. That's another story. I was honestly basically got somebody. The guy had taken pictures of a hotel, which just clearly wasn't. And this was like an Airbnb thing. It was an Airbnb type room, and it looked like a hotel. And it was absolutely dreadful.
Wow.
Like wires hanging out of plug sockets, kind of
Oh
dreadful.
dear.
So yeah, all down to learning experience. So I was meant to have 2 rooms, one for me, one for my
Yeah.
dad, and I was like, absolutely not. We are sharing, and just someone else can have that room. I'm not taking it. I'm not paying for
Yeah,
it.
no, it definitely. You don't want wires hanging out the wall. Imagine trying to test those if they're live or not. Goodness me.
Oh yeah, it just was completely mad. So
Cool.
yeah,
Okay.
agree on that
Yeah,
one.
we'll see
But
how
yeah,
it
looking
goes.
forward to hearing about your upgraded room. I'm sure it won't be that bad.
Yeah, we'll come back next week and close the loop. But yeah, for that's been episode 79 on gold. If you've got any thoughts, queries, or anything like that, do email us at nursingyourwaytowealth@gmail.com. Alex, thank you for your time, my friends, and I'll see you. We'll chat in a week and we'll speak next week.
Yeah, thanks, Alex, and thanks everyone.
None of what we discuss on the show is to be considered financial or health advice, and we recommend you always do your own research or consult an independent financial advisor or a doctor when making your financial or health decisions.